What is up, team, and welcome back. All right, this is part 2 of the 3-part series I'm doing, teaching you how to trade as a beginner. This is the basics, and on this channel, I've covered, from the basics, which we're doing now, to very advanced trading techniques. So if you're experienced, I would say that this video is not going to provide much value to you. I don't want to waste your time. But if you're trying to learn how to trade, if you watch the first part, I'm really excited for this second part. Now, if you're new, don't forget to subscribe. The Daily Traders is the largest trading and investing community on the internet with over 6 million followers across all of our platforms. I myself post my personal trades live in real time inside my mentorship group to prove to you that I am a profitable and successful trader myself. I don't want you taking advice from anyone who cannot prove that. The first link in the description below will give you access to this mentorship group. I'll actually throw a discount code right next to the link as well to get $50 off if you're interested in joining. But without further ado, let's hop right into this video. I'm going to throw up my screen right here. Now, when it comes to finding stocks to trade, right? The basics, okay? We want to find a stock that at the end of the day, okay, to our best knowledge, provides significant or at least enough upside to be worth the risk, to be worth entering. Now, one thing that I've heard is find a stock where overall direction is in your favor. And yes, that's great. That's great with bull markets, but this year we have been in a bear market. Now, most charts you're gonna look at are going from the top left to the bottom right of the screen, right? They're bearish. If they're going from the bottom left to the top right, that would mean they were bullish. So saying looking for charts that are bullish, where direction is in your favor, that's great, but it's not realistic. So I want to make sure that you're suited to, at the end of the day, be profitable, be able to make money in all market conditions. So I'm going to be talking about how to identify a reversal or a break of pattern. I like the word break of pattern better. And a break of pattern is a setup that I look for within a chart. I'm not going to be talking about options trading. Now, options trading is more advanced. Okay, it is leveraging your money. I'm just talking about buying shares of a stock. So we're looking for a chart that presents opportunity for upside. Now with options, you can short, you can play the downside, but we're simply looking for charts that will provide opportunity to make a margin for profit that is worthwhile, that is worth taking. And I'm gonna give you examples of a break of pattern. But as far as basics, you need to know, obviously, what candlesticks are. These are candlesticks. Now, each one of these candlesticks is 4 hours. Now, I do all my work on the 4-hour time frame. Now, you can trade on different time frames like the 1 minute, okay, which is a common time frame for day trading or scalping. You can trade on the 5 minute. The 5 minute will often give you a good view of the week. This gray section is pre-market and aftermarket. And then this dark section is throughout the day. So you can see each day, you can look at the overall week. Again, I'm doing all my work on the 4-hour, and that is simply because I like to swing trade. Now, day trading is buying and selling a stock within the same day. Swing trading is buying a stock, selling it tomorrow, or selling it, within a couple days or a couple weeks. You're swinging a position overnight. That is why I use the 4-hour time frame. So you understand what candles are and how you're gonna use different time frames depending on whether you want to day trade or swing trade. I'm gonna leave the chart blank. Now, there are different indicators you can use. There are different moving averages you can use. I'm not gonna be getting into any of those today. In the third lesson of this series, I will be. But today I'm going to be going over support and resistance. Now, you've probably heard of support and resistance before. Now, it seems like a simple topic, but it is crucial that you understand how support and resistance works within a chart. Not only to find break of patterns, okay, but to be able to manage your trade, to be able to figure out when you're looking to take profit on a chart, when you're looking to cut for a loss. Now, support and resistance are formed within charts multiple times. Okay, so you can see by looking at AEP, a resistance level that has been faced on this chart is at 105.48, the high on a chart. So the high on a chart is always going to give us our highest level of overhead resistance. And whereas the opposite, the low on the chart at 84.20 on AEP is going to give us our support. Our lowest level on the chart that will be acting as a support level. Now, within this low and this high, On all charts, not just the 4-hour, there are various support levels. I'm gonna try to find a clean chart where support and resistance is very clear. Now, we are able to identify support and resistance by looking at the candlesticks. So on this chart, ticker symbol AAL. Okay, you can see we're coming off our low here at 110.56. Our support formed on the chart on the 4-hour time frame. And now you can see off of that low, we got a nice push up to 127.29. Now, using this drawing tool on Thinkorswim, again, this is the platform I'm using, TD Ameritrade's Thinkorswim platform. I'm not sponsored by them in any way, but that's how I trade. But there are plenty of other options out there. But I'm gonna draw a line right here, a resistance line, okay? Because you can see candles were trading upwards, and all of a sudden, boom, we got rejected right here at this level, okay? At around 127.25, $127.25. All right, now I want you to pretend that none of this, okay, from here, okay, on over to the right, none of this is actually here. Okay, but you can see after we got rejected at resistance, okay, we started pulling back. And then we formed a nice support level at 113.87. So I'm gonna go ahead and draw a support level. So what we're doing is, we're looking at the chart, and based off candlestick movement, we are identifying our support and our resistance levels, which is gonna help us gain an understanding on how to play this stock, okay? And I'm just going back this far to help show you how to chart those support and resistance levels. Anyway, we got a bounce off of support, 113.83, started pushing upwards. You can see we broke above resistance at 127.25. Now, resistance has been broken. Our new resistance is at 127.55, roughly. Okay, started pulling back a little bit, trading range bound, little pullback. Okay, we've got support below. So we're still holding support. All right, started trading back upwards, and then boom, resistance broken. Okay, so we're gonna go ahead, draw our new resistance level, erase this previous one, and realize how we're still holding support. Okay, so I'm leaving that level there, but these previous resistance levels have been invalidated. It is important to understand this, okay? Previous resistance will act as current support. Okay, candles started trading downward. We've still got support below. And it's important to note that, each time we've pulled back, we have formed smaller, okay, minor support levels. So these are levels of support that we can use as we begin trading higher up on this chart. We're able to look at those support levels below. Okay, they haven't been invalidated. They're still gonna act as support. So I'll go ahead and draw them. Okay, we broke above resistance at 128.53. Now this resistance level will be acting as a support level. Now it depends how much of a support level based on candlestick movement. It may be acting as a strong support level or as a weak support level. Okay, you can see we got this large rally, formed a little resistance here, pulled back, formed some support. Okay, pushed through resistance, right? Formed a new level of resistance, pulled back, some support, pushed into that high at 144.46, just breaking resistance there. Okay, forming a new level of resistance, again, the high on the chart. Started pulling back, lost support, okay, at 138.79. Now, understand that the more times we test a support level and bounce off that support level, the stronger that support level becomes. Now, the fact that we did pull back and we did form some support there means that there is a support level there on the chart, but we only tested that level once, all right, one wick. So moving forward, we had to understand that when a reversal did come, that level at roughly 138.79 would not be acting as a strong support level. Now, whereas if you had seen, 1, 2, 3, maybe even 5 bounces off of this support level, you know that that level at 138.79 was acting as a strong level of support, and we could play in between our levels of support and resistance. Now, each stock, each chart tells a different story, and the stories change depending on the time frame. Moving averages will change depending on the time frame. Now, if I was to say go over to the 1-minute time frame, oh, look, all of a sudden our levels of either support or resistance no longer apply, okay? So you have to understand that. All right, so I hope you're starting to understand how to identify support and resistance levels. Now, you're gonna have to go on your own and practice this, okay? Practice identifying, okay, resistance. Look at, boom, rejection, resistance, rejection, resistance, rejection, resistance, pullback, support, okay? Support broken, obviously, pullback, support, bounce off support. Okay, so this is broken and validated. Boom. Broken and validated. Boom. Okay, current support. These are all current resistance levels. Let's go ahead and remove these. I'm gonna find a chart now, knowing what we know, knowing what you know so far, a chart where we can identify a break of pattern, a chart that we are gonna know enough based off of support and resistance to be able to buy some shares of a stock and play a move to the upside. So we're gonna start visually scanning through some stocks. I'm looking at the S&P 500 and I'm looking for a chart where a clear pattern of lower highs has been formed. Okay, let me show you what that looks like. Here is a chart, very clear lower highs on Roku. Okay, coming off that high at 241.46, you can see that we've consistently been forming lower highs. Okay, lower high, lower high, lower high, lower high, lower high, not able to break above previous resistance. Okay, say resistance is formed, pulled back. Okay, not broken, form more resistance, pulled back. Okay, more resistance, pulled back, more resistance, pulled back, more resistance. Okay, now you can see where our knowledge of being able to find a resistance level is gonna come into play. Now, more recently, okay, if I'm gonna look in a little closer here, you can see we formed that low at $60.58, which is gonna act as our support level. Now, assuming that this pattern that has been developing and playing out over the last several months continues to play, we can expect a new low formed, okay, because we formed a new low each time. Now, one trade I may take, a little secret here, a little secret sauce, is just playing a move back down to that low, knowing the overall pattern, knowing that we could capitalize on a move back down to that low. That would mean that we would have to take a short position. So I don't want to get into that, but know that there's exciting stuff you can do with charts. You can play multiple directions on a chart, but what we're going to do is assume we're going to pull back into this support, break through it, form a new low. We might catch a bounce off of it. If we do, looking at the overall pattern, we can expect a nice rally to the upside. Now, with the limited drawing tools that Thinkorswim has, say this is just candlesticks trading back up to toward this level. Okay, now I did a poor job at drawing my resistance level. I'll make it a little more accurate here. But what we're gonna do is say, okay, we wait for that either bounce off support or break below new support formed, wait for candles to trade back upward toward this resistance level. What we're gonna do is wait to see if we can break above resistance. Now, a break above resistance would mean a shift in overall direction, because for the last, like I said, several months, we have not been able to break back above resistance. So if we get a break above resistance, okay, a break in the pattern of lower highs, that will give us indication that overall direction has shifted and we can buy shares, okay? It's pretty straightforward. So once you see that overall direction has shifted, that pattern of lower highs has been broken, waiting for confirmation, and confirmation is a break above our resistance level, then that will give you an indication that that is a good time for an entry. Now, earlier I mentioned you want to make sure that the margin for profit is worth it for you. So say candles traded back up to that 89.56 level. They broke above that level. We entered right here. Now, using our tools, we can see the margin for profit presented upon entry. Say we enter right around 89.71. Right after confirmation of a reversal, we will be presented with a 8%, right? Roughly an 8% upside. So to our next level of resistance, we're presented with an 8% margin for profit. Now, we found that based off our knowledge, based off of what I taught you earlier about how to identify resistance levels, that once one level of resistance is broken, that means that candles are going to continue trading up to the next level of resistance. So you have to calculate the margin for profit and see if it's worth it for you. Now, say we hold up till that 97.78 level and candles break above that level. Now, look, we can either lock in profit or we have another 4% margin for profit up to that next level of resistance. Okay, so I think you're probably starting to understand. I'm gonna find one more chart to give one more example. Again, every chart is different. Some charts are more clear. They have more clear patterns. They're cleaner. Now, the cleaner the chart, the better. Now, that is because you're gonna be able to identify your support and your resistance levels much easier. All right, now the second chart we're gonna be looking at is ticker symbol BAX. You could see, again, a bearish chart going from the top left to the bottom right. Now, I think this is interesting. I've seen other YouTube videos out there where you're presented with the idea and the strategy that you can only make money trading shares in a bull market. Now, you don't, at least from what I've seen, we're not presented with the correct tools to make money just trading shares in a bear market where you can make money trading stocks on a chart where overall direction is bearish, where it's not in your favor. Again, it's great to have a solid chart where direction's in your favor, where everything's going up, where the market's green every day, like it was in late 2021 or 2021 sometime. I remember there was a period of a couple months where everything was just going up, but in reality, that is not realistic. Now, you want to learn the skill of trading so you can do this for the rest of your life. So you need to be presented with the different ways in which you can make money when it comes to trading markets that are going down. You don't need to be shorting. You just need to know how to identify a chart like I'm showing you right now where opportunities are presented to make money when you catch an upside swing. Okay. And then when the market's going up, it's that much easier, right? When the market is very bullish, it's that much easier to make money. So if you've been trading this year and you're up, then congratulations, right? I'm up 260% year to date on the callouts inside my mentorship group. Again, I post all my personal trades live in real time with full transparency. Again, link in the description if you'd like access to that. But if you've made money this year, then you're going to be well off making money in years to come. So you can see very clear pattern of lower highs presented. We're going to go ahead, look a little closer in on this chart, pull out our drawing tools. You can see pulling back here, little push. We've got some resistance formed at 67.45, support. Okay, support broken, support, pull back, support broken, right? I don't even have to draw. I can just see it. Pull back, okay, support formed, push, resistance, support only tested once, okay, so not surprised that we broke it here. All right, I just want to give you one support level so I can show you that what I'm going through in my head is what I just showed you. As we're charting it out, I could see, okay, we formed a support level. Obviously, I can see where it's broken. It was only tested once. Again, it's important to understand that the more tests of a support level, the stronger it will be. Pulled back here, low formed at 56.14 just recently. Actually, that was just today. Okay, so now what I'm gonna do is I am going to, two things I can do. I can play a bounce. Now, this is another opportunity. We don't need to wait for a breakout. You can wait to see if the chart is able to hold this low that was just tested today. So I'd say within the next 3 days, we should know if this support level at 56.14 is going to hold or not. Now you can enter now and play the move back up to this resistance level because you could see every pullback, every drawback has resulted in an upswing. Okay, drawback, upswing, pullback, little upswing. You just have to be aware that charts will continue to bleed out as they did right here. So keep your stops tight, manage risk. I don't want to present you with too many different scenarios because there are tools that we can use. We're going to have a toolbox. I'm going to make sure that you have the right tools in your toolbox to know when a stock is going to start bleeding out, or at least to know when to get out of it, how to manage upswings like this, how to capitalize on short-term and long-term upswings. But in general, again, we're talking about a break of pattern. What we want to do is wait, for candles to begin trading back up toward this resistance level. Now, as you can see, resistance formed at 62.23. We're going to wait for a break above this level. Once we get confirmation, we're going to enter and play that move back up to our next level of resistance. You can see there is going to be another level of resistance here at 67.08 because we did not continue pushing up and test this resistance level. There was resistance at 67.08. So resistance levels can be very close to each other. They can be very far away. Again, every chart tells a different story. So upon confirmation, entering now, buying shares, this trade would present a 7%, right? A 7 to 8% margin for profit, okay? Because there's clearly no resistance between right here at 62.23 and our resistance at 67.08. Now it's important to understand, again, previous resistance will act as current support. So if we break above this resistance level, start trading upwards, maybe a percent or two, and then start pulling back, this level at 62.23 will be acting now as a support level. And we might start trading range bound within these two levels, 62.23 and 67.08, slowly trading upwards toward resistance, or again, like I said, trading range bound. Direction will be presented eventually, and you can manage your position accordingly. So just because there is a 7% margin for profit doesn't mean that that trade is going to play out over the expected time period or the time period that you're hoping that it's going to play out in. You need to know generally how long you're looking to hold each position upon entry. And according to that, that is going to help you manage a trade. Now, if you're looking to enter upon confirmation of a break of pattern, a break of lower highs, play the breakout and hold this stock for, a couple weeks, maybe a month or two, give it the time to work back up to that resistance, which I'm sure it will, then that's great. Or you can set your stop slightly below 62.23. So you can capitalize on the full margin for profit, okay, with a tight stop, or you can just play up a couple percent, knowing that there will be momentum upon a break above resistance. All right, that is going to conclude the second part in how to trade as a beginner. If you're new, don't forget to subscribe, smash that like button. I post a new YouTube video myself every week at 3 p.m. Eastern Standard Time on Wednesday. We have a weekly podcast, and my co-host of the podcast, Jack, is going to be posting a new YouTube video every week himself. So 3 new pieces of content every week. Go ahead, follow myself on Instagram. DM me on Instagram if you have any one-on-one questions for myself. I take time to look at my DMs every day. And without further ado, I will see you all in next week's episode. Later.